Well, I want to start as a good afternoon, good morning, wherever you are. It's an exciting time to discuss some of the matters that we'll be discussing today. So we are very pleased to have another Latin America policy dialogue. As you know, we've been organizing these seminars in the past few months, and the idea is exactly to discuss some policies and reforms that we think and challenges that we think that Latin America will, and parts of the world as well, will be facing in the next few months and years. And so today we'll be talking about confronting climate change in Latin America. Before I present the panel, I would like to ask Costa Rican ambassador, our friend and very active ambassador at the OECD, Elias Soleil, who is going to give us an overview, basically, of the discussions that the recent Latin America and Caribbean Ministerial Summit on Environmental Sustainability that was held in 5th of October in Costa Rica. So he's going to brief us, basically, on some of the main debates at the time. For example, during the ministerial, the OECD launched a report entitled Towards Climate Change Resilience and Neutrality in Latin America and the Caribbean, Key Priorities, that puts together exactly a set of 40 key policy recommendations which constitute the Latin America Action Plan towards climate resilience and neutrality. So without further ado, I would like Elias to take the floor and say a few words.
Thank you, Alvaro. It's good to see you again. I want to take this opportunity to congratulate you on your new position on the OECD. I know it's going to be a wonderful experience. And I'm deeply honored to begin by extending my heartfelt gratitude for the invitation to participate in the 9th edition of the Latin America Policy Dialogues webinar series. It is indeed a privilege to be part of this distinguished gathering that brings together leading Latin American policymakers and esteemed researchers. Together, we embark on a journey to deliberate upon the economic, environmental, and social challenges that confront our region. I would like to take a moment to reflect on a momentous event that unfolded recently. On the 5th of October, the first Ministerial Summit on Environmental Sustainability under the OECD Regional Program for Latin America and the Caribbean convened in San Jose, Costa Rica. This summit served as a clear call for united and supportive action, accentuating the significance of knowledge sharing and the exchange of experiences in addressing global and regional challenges in a harmonized and effective manner. This landmark event underscored Costa Rica's unwavering commitment to champion and disseminate OECD standards and policies throughout the Latin American Caribbean region. With over 300 participants, including distinguished government officials, this gathering bore testimony to its global and regional significance. Furthermore, it is imperative to emphasize the pivotal role played by the European Union and the Development Bank of Latin America, CAF, in facilitating this summit, ensuring the active participation of authorities from across the region. The diverse representation from countries worldwide enrich our dialogue, offering a wide range of perspectives and experiences. One of the standout achievements of this ministerial summit was the presentation of the report called Towards Climate Resilience and Neutrality in Latin America and the Caribbean, which presented a comprehensive action plan comprising 40 policy recommendations. This plan is designed to support Latin American and Caribbean nations in fulfilling their international commitments, including those delineated in the Paris Agreement, and regional and national pledges related to climate and sustainability. This summit outcomes bear immense relevance as we anticipate the upcoming United Nations Ocean Conference in 2025, an event under the joint leadership of Costa Rica and France. Additionally, the summit yielded 10 policy briefs, with a particular highlight being the report promoting foreign direct investment to boost the transition towards a low-carbon economy in Latin America and the Caribbean. Supported by the government of Costa Rica, this report holds the potential to invigorate the OECD's endeavors in enhancing the qualities of foreign direct investment in the region. The Ministerial Summit was an integral part of the expansive OECD Sustainability Week in Costa Rica, an event that encompassed a rich array of activities focusing on environmental affairs. These diverse initiatives span numerous themes, from youth engagement to employment, circular economy, and the role of the private sector in advancing the green transition. We should agree that our current era confronts us with unparalleled challenges. The COVID-19 pandemic has laid bare the fragility of our economies, underscoring the necessity for heightened economic resilience. Concurrently, climate change poses an existential threat to our planet, demanding immediate and substantive action. Balancing these economic and environmental challenges necessitates a profound reevaluation of business operations and their role in forging a sustainable and resilient future. A green and just transition offers the promise of rendering Latin America societies more resilient to climate change while fostering enhanced overall economic growth and productivity. As evidenced in the Economic Outlook for Latin America 2022, impactful green policies have the potential to usher in a 15% growth in employment within green sectors by 2030. Nonetheless, such a transition mandates substantial resources to fund green initiatives and avert potential economic losses tied to a 2.5 degrees Celsius global warming scenario, estimated at 1.5% to 5% of GDP by 2050. Governments must progressively phase out subsidies, introduce environmental levies, and leverage financial instruments such as green bonds to mobilize the necessary funding. This collaborative effort must engage the private sector and bolster environmental regulations. The green transition calls for historic levels of capital investment in clean energy, transportation, and industrial infrastructure as fossil fuels are replaced by low carbon alternatives. While the costs may fluctuate, estimates range from 100 to 300 trillion US dollars by 2050, necessitating an annual net investment of 2% to 8% of the global GDP. In conclusion, it is crucial to underscore the paramount importance of collaboration and cooperation in addressing the global climate change challenge. Realizing a transformation of this magnitude requires engagement across diverse sectors of our economies, along with policies that facilitate public and private partnerships, foster research and development, and attract foreign direct investment in green technologies and industries. As we immerse ourselves in today's discussions, I urge each one of us to delve into novel strategies, innovative solutions, and sustainable practices that businesses can embrace to tackle these urgent issues. This event serves indeed as a poignant reminder that everyone plays a pivotal role in this transformative journey. Without further ado, Alvaro, I wish you a fruitful and enriching discussion to all of you, and thank you very much.
Muchas gracias, Embajador. Thank you, Elias. Thanks for the update. I think that's quite useful for us to know. So now let me introduce our distinguished panel that will be talking about how to confront climate change in Latin America. I think we have three fantastic speakers and researchers and policymakers with us. First of all, we have Eduardo Caballo, who is an economist with a wealth of experience in international organizations, but also universities and financial sector. Currently, Eduardo serves as principal economist at the research department of the Inter-American Development Bank in DC, but also as an adjunct professor at Johns Hopkins University, Paul Nitze School of Advanced International Studies. And Eduardo's expertise lies in several fields, but one of them is international finance and the economic consequences of climate change and disasters, with a particular focus on Latin America and the Caribbean. Second, we have also Sylvia Charpentier, who is a member of the Central Bank of Costa Rica board since 2009. Her career started with significant contributions during Costa Rica's debt crisis in the 1990s. I should say that we still use that a good example, good practices, how to deal with some of these issues to many other countries when we talk with other countries. And since then, her career encompassed several roles, including serving as alternative executive director at the World Bank Board and a member of the Costa Rican Congress. Her professional dedication is predominantly focused on critical areas of nature, climate, housing, finances, and financial policy. And so we are very pleased to have Sylvia with us as well. And finally, we also have Carola Moreno, who comes from Chile and serves as the Finance and International Affairs Coordinator at the Chile Ministry of Finance. Carola has served several various key positions. I've had the pleasure of meeting her in our own missions when we do surveys, including the interim head of International Relations Unit at the Central Bank, advisor to the manager of the Financial Policy Division at the Central Bank as well, but also as Chile's representative at the IMF. And so we are very privileged to have such an expertise to our panel. As we know, not only for Latin America, but confronting climate change is crucial for the region because many countries of the region are particularly vulnerable to adverse effects of climate change. And these challenges are exacerbated by existing developing issues such as sluggish economic growth, still high poverty rates in parts of the region, but also inequality, as well as fiscal vulnerabilities. And important to say that many Latin American countries have established ambitious targets for emissions reduction and carbon neutrality. However, very often they lack well-defined strategies to attain these goals, and even less how to finance them. So that's why it's so important to talk about these issues as well. I would like to start by saying that first, each speaker will provide a concise overview of their expertise in relation to this topic. And with that, we can start with Eduardo. Eduardo has recently published a special issue in the Economics of Disaster and Climate Change journal focused on Latin America and the Caribbean. This issue aims to investigate on various economic impacts of climate change, aiming to enhance understanding and propose solutions amid this unprecedented climate challenge and shift. And so, Eduardo, you have 10 minutes to present briefly the macroeconomic impacts of changing climates and disasters discussed in the publications. Thank you.
Good afternoon, good evening to you. Thank you, Alvaro, for that very kind introduction. Let me start by joining Ambassador Soleil for congratulating you for your new role at the OECD and wishing you the best of luck in there. We have worked close for many years, and I'm looking forward to the next phase. So congratulations on that, and thank you very much to the OECD for organizing this and making me part of this panel. I'm going to discuss about the macroeconomic impacts of changing climate and disasters with a focus on Latin America. This is a lot of background work we are doing towards our flagship publication that will come up next year, focusing on these issues. The first point I want to make is that, doesn't need a lot of motivation in this audience, but it's still worth mentioning that climate change is already a reality that is occurring. Since the early 20th century, global temperatures have been on a consistent rise. If we look to the left panel here, this illustrates how the so-called global temperature anomaly, which is basically the difference between the annual mean temperature and the average temperature from 1901 to 2000, has been on an upward trajectory. Noticeably, this increase in global temperature anomaly has gained momentum since 1975. And to put this into perspective, our global mean temperature now stands approximately 1 degree Celsius above the century's average. If we take the most recent period between 2015 and 2022, 7 of those years have been the hottest in recorded history already. And to add to that, this year, 2023, has already set another record. Now, shifting the attention to the right panel, we see a depiction of the surge in various types of disasters over time. Among these, some are directly influenced by climate change. So, for example, meteorological events, which encompass extreme temperatures and storms, have seen a 5-fold increase since 1970. Hydrological episodes, like landslides and floods, have multiplied by 6 times since 1970. And climatological disasters like wildfires and droughts have also increased by a factor of 6. Now, the projections are that these patterns will tend to intensify. This figure shows the projected global temperature anomalies under selected SSP scenarios. The SSP scenarios stand for Shared Socioeconomic Pathways, and they are scenarios that include a set of narratives and quantitative projections about different future socioeconomic developments and their implications for climate change, mitigation, and adaptation. So the narratives differ, for example, in terms of projected population growth, economic development, technological progress, environmental protection, globalization, and other factors. There are 5 main scenarios. The important point here is that under all the SSP scenarios, except the one that is compatible with the Paris Agreement goals, the SSP1 scenario of limiting warming to less than 2 degrees Celsius compared to pre-industrial levels, in all those scenarios except this one, the projected global annual temperature anomalies is projected to rise as we go forward. As you know, the Paris Agreement relies on the so-called National Determined Contributions, or NDCs, as the main vehicle for driving climate action and increasing global ambition over time. Effectively implemented NDCs are critical for achieving the agreement's goal. Now, according to the United Nations Emission Gap Report, total global greenhouse gas emissions in 2030 are estimated to be around 58 gigatons of carbon equivalent based on the implementation of the latest NDCs. What this figure is showing is that this level of emission is about twice what is needed for the Paris Agreement goals. So there is a large emission gap here, which is illustrated in this figure, between where the emissions are heading and where they need to be. Okay? Achieving the Paris goal will therefore likely require most countries to update their NDCs with more ambitious targets and to implement policies aligned with the net zero emissions by mid-century. Now, what does all of this mean for Latin America and the Caribbean? First, we need to acknowledge that Latin America and the Caribbean is unique on various dimensions. It's a region that is very highly urbanized. It's a disaster-prone region. It's a vulnerable region, particularly in areas of the Caribbean and Central America, which are located in an area that is prone to disasters. It is home to the Amazon and other biodiversity hotspots. On the plus side, it has some relatively clean electricity generating matrix compared to the rest of the world, but it's also a major source of forest carbon emissions. The high rates of deforestation in the Amazon, for example, threaten to transform one of the global largest carbon sinks into one of the largest sources of carbon emissions, with many areas in the Amazon already emitting more carbon than what they capture. Also, Latin America faces some specific challenges. It's a region with high levels of poverty and inequality. indigenous and Afro-descendants peoples are highly vulnerable to climate change. There are groups with vested interest in the status quo. Of course, this is not unique from Latin America, but there are certain characteristics of the Latin American politics that tend to amplify the influence of these groups and make reform harder compared to other contexts. It's a region with low growth. We have been facing the problem of low growth for a long time, and we also at the same time have severe fiscal vulnerabilities. And finally, it's a region where there are many competing and urgent development challenge. So I want to show you some results or some evidence on how climate change is impacting Latin America and the Caribbean specifically, to try to set the stage for this discussion. There's a very well-known study by Burke et al. That shows that the effect of rising temperatures differs from countries with different climates, because basically economic growth responds non-linearly to rising temperatures. So this figure here shows the estimated effect of annual temperature on GDP growth. This is work done at the IDB, extending the Burke et al. Study in a number of dimensions, including more countries and also expanding the period coverage. The point here is that all countries in the Latin American and the Caribbean region, with the exception of Chile, are located on the declining portion of this figure, meaning that higher temperatures from here on will result in lower GDP growth. Similarly, total annual rainfall has also nonlinear effects on economic growth. Increases in the number of wet days and extreme daily rainfall have negative effects on economic growth rates that can persist over time. Moreover, changes to the distribution of temperature go beyond changes to the mean annual temperature. So climate change is expected to increase the mean and also increase the variance of temperature distribution, leading to greater dispersion. This is what this figure is illustrating. Now, this shift in the distribution to the right basically means that there's going to be, the flattened shape and puts basically more weight on the tails. But what this means is that these changes will substantially increase the number of days with extreme heat going forward. And why is this important? This is important because extreme heat has also negative effects on economic growth. So this figure shows the estimated effect of heat waves on the growth rate of gross regional product, GRP, differentiated by intensity and duration of the heat waves. So each dot in this figure represents the coefficient from a separate regression on the annual count of heat waves on growth rate of GRP, and the bars are the 90% confidence intervals. So basically what this figure is showing is that more intense and longer duration heat waves have a negative impact on regional product. Let me also say something about how climate change is related to disasters and how this is expected to increase the frequency and intensity of climate-related disasters. So this figure shows the estimated impacts of windstorms on GDP per capita growth in Latin America and the Caribbean and in the world. So each panel here depicts the different intensity storms, from higher intensity storms, the so-called top 10, to the lower intensity storms, the top 50. So an interesting feature that emerges from the data is that while the severity of the negative impacts of storms on economic growth generally diminishes with less intense storms in the global sample, those are the red dots, okay? The same pattern is not observed in a sample of storms in the Latin America and the Caribbean region. That's the blue dots. In Latin America and the Caribbean, the negative impacts of storms on economic growth are estimated to remain about the same across varying intensities of storms. Now, this suggests that in our region, the frequency of occurrence and not just intensity of the storms matters for economic outcomes. And this is worrisome in the context of climate change because both the intensity and the frequency of storms are expected to increase. And therefore, what this suggests is that the region, Latin America and the Caribbean, could suffer even worse impacts than the rest of the world on this dimension. We have also recently looked at the channels through which storms impact GDP. So on the demand side, we find that consumption per capita falls in Latin America and the Caribbean by more than in the global sample, and also exports per capita decline in the aftermath of storms. In terms of the recovery, we find that imports per capita growth remains more subdued in the short term than in the global sample, possibly reflecting tighter financing constraints faced by Latin American and the Caribbean countries in the aftermath of these events that delay the recovery of imports. On the supply side, the main implications arise on TFP growth. And this is true both in Latin America and the Caribbean and in the rest of the world. On average, the growth rate of capital per worker and labor force participation remain unchanged. So what basically this is telling us is that the estimated negative effects of storms on output come mainly through the misallocation of productive economic resources that they trigger. Now, all of this also is compounded by the fact that the negative effects that I have just shown you affect disproportionately more the poor. We see this in the evidence both across countries. Basically, low-income countries experience the largest negative impacts of rising temperatures, and also within countries, the impacts of higher temperatures on household income steadily decrease across deciles of the income distribution. This is basically because the poor are more vulnerable and less prepared to confront the challenges of climate change. So what can Latin American and the Caribbean countries do? I'm going to be very brief here because the panelists coming forward have probably a lot more to say than I on this dimension. But one thing that countries need to do is focus on adaptation. And for this, we need a holistic approach. Okay? This means a multifaceted strategy to reduce vulnerability across economic sectors and across groups in the population. We must also think, for example, about how to adjust fiscal policies to confront the challenge of climate change, and also be creative on financing options, something that the ambassador stressed in the introductory remarks. Building resilience requires a combination of factors, including, for example, designing and implementing better building codes, fashioning better early warning systems, strengthening emergency response systems, reforestation strategies, and also bolstering institutional capabilities. Let me say something about decarbonization and mitigation. Countries on this dimension should try to tap on the opportunities to decarbonize their economies. As we said at the beginning, achieving the Paris goals will likely require most countries to update their NDCs with more ambitious targets. Okay? Now, this does not need to be an impossible mission or an onerous or even an onerous one. So Costa Rica, for example, provides an excellent example. As the Costa Rican decarbonization plan shows, the benefits of investing in sustainable infrastructure far outweigh the cost. So the plan establishes a timeline for public transport to progressively switch to electric or hydrogen vehicles by 2050 and identifies immediate regulatory changes needed to enable it. So implementing this plan will bring about $41 billion in net benefits to Costa Rica between 2020 and 2050, which is equivalent to boosting growth by almost 0.5 percentage point. So,
Eduardo,
yes.
if I may, do you mind if this part will be for the second part of the
sure.
questioning?
Let's,
so that we,
yeah,
because I'm going to ask you some of these issues as well. So
okay.
Fantastic presentation. So thank you very much.
Thank you. No.
Thank you. And so let me just now ask basically Carola to discuss a little bit on Chile's pioneering role in sustainable financing. Obviously, this is a big issue that many countries are facing, emphasizing facility and risk mitigating instruments to leverage private financing. And remember that Chile was also a pioneer issuing sovereign sustainability-linked bonds in March 22. We know that Chile has abundant natural resources, including wind, solar, and minerals, like copper and lithium, but also they've been very key in driving sustainability efforts. And so, Carola, perhaps you could share your insights into the financial regulatory incentives from a macro financial point of view, and the other policies that will develop in Chile. Please, Carola, proceed. Thank you.
Thank you very much. I join everyone else on congratulating you. Actually, Mr. Cavallo just helped me or guide you through the points that I had organized to mention. So to start, Chile is very committed, as you mentioned. We have by law the net zero commitment by 2050, which is something that, of course, is guiding the whole policy, driving mitigation and a lot of adaptation plans at the national, regional, and also the local level. So in this regard, we are also very active into measuring public spending and public investment on climate change. This is also something that is at the basis of the financial strategy in order to be able to achieve our NDC commitments. So I want to mention 3 points. One that has to do with what you were mentioning, the green transition, and how, as Professor Cavallo was mentioning, we have competing, right, urgent development challenges. And so how this green transition is going to help us improve productivity and also help us into increasing potential growth. So we are, by developing this new industry and bolstering the green transition, we're also increasing our potential. The second point that I'm going to mention has to do with aligning the financial strategy with our climate strategy and also with our biodiversity goals, and I'm going to mention the SLB. Third, I want to mention how resource mobilization is going to be very important and how we're greening the financial system with some instruments and innovations there. And I just want to finish with that the climate strategy has to go along with biodiversity protection and restoration. We cannot talk separately among those two. So on the first topic, what we're doing is we're taking the strategy for green hydrogen development from the previous administration. We're thinking about this as a state, as a long-term strategy that does not depend on a particular administration. We basically want to take advantage of the natural advantages that we have in terms of solar energy and in terms of wind energy, and also try to develop complementary industries such as, for instance, this desalination, and in order to boost the production of green hydrogen. We actually can transit from an energy importer country, from fossil fuels import, into an energy exporter country. And we are being very ambitious in terms of how we want to get there. And this involves boosting the local demand, but also attracting investment and trying to boost, of course, external demand. And there's two things in terms of policy that are very important. So one has to do with permits. And in that regard, environmental permits and also sectorial permits, land use, is an issue that is being raised by many investors, and we are working very closely into making them faster in terms of and more efficient in how they are given, and of course protecting the overall goal of protecting the environment. So we are thinking of having a regulatory policy that has a more holistic view in terms of permits delivery. In terms of mobilizing investment and leveraging private investment, we are building a financing facility with contributions, loans that we take from multilaterals in a concessional basis. And with this, we're going to be able to have a risk sharing and diminish actually the risk exposure of the private sector in order to boost the development of this type of projects. So that is something that is under development. And in terms of the second point of aligning the financial strategy with the climate strategy, so at the beginning of 2022, a new type of bond was developed at the sovereign level, which is the sustainability-linked bond that you mentioned, Alvaro, at the beginning. So this type of bonds, what they do is, as opposed to a green bond that has an underlying project to be financed on a use of proceeds basis, this type of bond includes KPIs, so key performance indicators for the medium term that are linked to the NDC commitments of Chile. So in this regard, we are linking or giving some incentives for the strategy of decarbonizing the economy with the financial strategy. Why? Because at the moment in which these KPIs are set to be measured, if the goals are not achieved, then there's a step up on the coupon. So in that regard is that we are aligning the financial strategy, as I was mentioning. So recently, we also included a social KPI. So we are aiming also at combining not only the sustainable development that has to do with climate, but also with the SDGs. And so we included a gender equality more related actually to women empowerment in the recent SLBs that we've issuing. So that's in terms of innovation and aligning strategies. In terms of greening the financial system and mobilizing resources, as Eduardo rightly mentioned, there's a lot of heterogeneity in terms of how different activities are advancing into achieving their net zero goals. And that results in different pace of achievement at the level of country level. And also this, on the other hand, has the other side of the coin, that is a lot of gaps in terms of the financing needs to achieve these various goals and trying to fill the gap in terms of the heterogeneity of advance. So one example of what we're doing is we're developing an environmentally sustainable taxonomy to be able to fill these gaps in terms of how we identify activities that are green and therefore to try to mobilize resources into this type of activities. So what we have up to now is that we have defined the structural elements to define this and to actually construct this taxonomy, which is a classification system, right? We're basing our work on the European taxonomy, but adapting it to the local characteristics that we have in Chile. We're going to be working now on defining selection criteria, that is the thresholds upon which we will assess what would be the sustainable contribution that different activities have to these objectives and environmental objectives, which are going to be mitigation, and as we need a lot to boost investment on adaptation. There's also adaptation objectives and other objectives that we will be including as we get data and as we are able to pilot and be sure that we're building the taxonomy in the right direction. So that is the way, in one example of what we're doing in order to green the financial system and to actually mobilize resources into environmentally sustainable activities. So I wanted to mention the last point on not dividing the climate strategy with the biodiversity strategy. So again, it was mentioned that the region is very rich in biodiversity spots, and we're also very prone to disasters, right? So that is the case as well in Chile. So we need to protect and restore, and for that, we need to know and to measure our natural capital. So we created the Natural Capital Committee that is intended to create a methodology and to apply this methodology in order to be able to quantify or to measure ecosystem services. And this will allow us to guide public policy, and public policy not only to protect biodiversity, but also to build resilience, and also to be able to quantify damage, which is also something that it's very important to realize, that we also need financing for damages and loss. So in that regard, this committee is going to advise the President of the Republic. It's going to be a permanent committee, and we're going to start, of course, piloting in order to know how to measure and how to value. And this is also really important because it allows also to orient for instance, you can buy insurance. And you can buy insurance for different types of disasters. In our case, we have insurance for earthquakes. It's not climate related, but it's a type of instrument and innovation that could also be related to the fact that you are able to assess what is the value of your natural capital, but also what is the cost or the loss when there's a disaster that destroys it. So we have commitments, we have action through key strategic developments at the productive level, at key industries that will help us decarbonize and get to our net zero commitments, achieve them, while increasing productivity. We have a financial strategy that is aligned with our climate strategy. And we have these instruments that are helping us to mobilize resources, so greening the financial system, and all of this together with reconciling our climate change strategies with biodiversity protection and restoration.
Gracias, Carola. So now we turn to Sylvia. Sylvia is, as I said earlier, is representing the Central Bank of Costa Rica, and she will provide valuable insights into the critical role that central banks play in advancing sustainability and climate change resilience in Latin America. Obviously, this is a hot topic for many central banks, And so I think Silvia's Costa Rica perspective will shed light on the challenges central banks face in engaging with climate support to support macroeconomic and climate risk assessment. So Silvia, please go ahead.
Thank you very much, and congratulations to my peer panelists on great presentations. Thanks again for the invitation to participate in this dialogue, and I'd like to share my perspectives on confronting climate change as experienced at the Central Bank of Costa Rica. This is going to be a very dynamic presentation, so I'm going to go quite fast. In 10 minutes, I hope to cover all. So I will cover 4 topics that I hope achieve this goal. One is the process of institutional awareness, our approach, areas of work, concluding remarks. So let's get started with the questions of why a central bank should engage with climate and nature issues. So this is Costa Rica. This is also Costa Rica. This is beautiful biodiversity from Costa Rica. And this is our map. As you can see, we have 2 oceans, and you can see here how vulnerable it is. As Eduardo was mentioning, its geolocation makes it very vulnerable to climate impacts. Our GDP is 63.6 billion, population of 5.2 million, area 51,100 square kilometers. And our coordinates, 11 degrees north, 84 more or less degrees west. And so this is important because of what I'm going to say later. So all vulnerability makes, unfortunately, that this is also Costa Rica. We have landslides, rising sea levels, floods and the interruption of services, more floods, lives in danger, biodiversity loss threatened. And the other extreme, El Niño, with droughts, temperature anomalies, and something very important, our renewable electricity grid threatened by low levels of water at the Arenal Dam. So there's a need now to resort to import fossil fuels. This is terrible news for us, which triggers higher consumer prices. I think the Paris Agreement, together with multiple scientific warnings of these impacts, triggered much more than what the letter of the accord actually says. It generated a clear awareness about the fact that our species is altering the parameters and variables of the biophysical systems that support human life, something that was discussed among scientists until then, and that in turn is having a major impact on our activities on the planet. And as a consequence, it also triggered a call for explicit intervention and government policies to regulate economic and social activities that have an impact on climate. Yet, the role that central bank and ministries of finance can and must play in this field has been developing slowly at the global level. I am pleased to see greater movement and momentum now as institutions like my own, like Carola's, IDB, and other colleagues, and many others in the world have begun to become aware of the acute need for action in relation to the macroeconomic and financial impact of climate change. Awareness of environmental issues in general began at the central bank as early as 2011, 2012, but as it may have happened in your own institutions, it focused primarily on environmental protection, considering issues such as recycling, measuring paper, electricity, fuel, and water consumption. And that is quite all right. It's perfect, and it was a great beginning. In 2016, however, we were hit by Hurricane Otto, which literally traversed Costa Rica. You can see the path there. And a year later, Tropical Storm Nate caused great damage. Emergency response was costly and no fiscal provisions had been made in advance. Some of us at the central bank began asking difficult questions. So how will we face similar situations when they become a recurring pattern? How will this affect the bank mandate of maintaining macroeconomic and financial stability? So despite the natural and expected skepticism amongst economists, which you may all be very familiar with, we created a small multidisciplinary group who volunteered their time to answer the question, is climate change at all relevant for the Central Bank of Costa Rica? So using the bank's own risk assessment methodology, the Group for Strategic Analysis of Climate Change, GAEC, that's its name, comprising representatives of different central bank departments, began to explore and address the impacts and risks related to climate change to the central bank main objectives. And they found out with a lot of research and questions that yes, it affects the strategic objectives of the bank. It affects inflation, to keep inflation within the range of tolerance, and it also affects our ability to promote a stable and efficient financial system. Our trajectory since then has not been easy, but the members of GAEC and the bank very slowly have been willing to stay the course, which required, among other things, to address several interrelated questions. First of all, we had to learn the language, learn the distinctions and definitions of a new language to incorporate climate change considerations into central bank activities, to properly pursue its mandate in a new biophysical context. Number two, acquire knowledge and use critical thinking to apply new concepts to the tasks that pertain to a central bank. This was important because, of course, a lot of knowledge was being generated in the North, in developed countries, but not necessarily applicable to our own countries. Third, gradually involving bank management, division directors, and members of the board has continued to be a challenge. And fourth, move from a hierarchical operational framework to a more horizontal structure in which a multidisciplinary team may contribute significantly, but that has been difficult to put in practice, I have to confess. Finally, appoint dedicated staff took time and prompted many questions, including from the board. The approach we follow to forge a path in this new area of work involved the following. So first of all, or among other things, we joined the Network for Greening the Financial System, NGFS, in 2019, which proved to be a great step, I think, and it has been extremely useful and made us a member of this, a proud member of this coalition of the willing, as we like to call ourselves. Then starting in 2018, we began to have extremely productive exchanges with peers, with external cooperation, bilateral and multilateral partners, including OECD, the IMF, the World Bank, IDB, among others. And then we included lines of work as reform measures in Costa Rica's Resilience and Sustainability Facility, which Costa Rica was the first country to sign this type of facility with the IMF, and it has been going well. As we progressed in our learning process, three things became clear. Climate and nature issues are country-specific and require the involvement of several professional and academic disciplines. Number two, geography and geolocation, and that's why I put the map in, have become extremely important, which is why we are incorporating spatial variables into our lines of work. This has required the development of recording and developing analytical tools to take into account the location of economic and financial activities throughout the Costa Rican territory. And third, climate and nature are part of the development agenda. And rather than artificially treating these as separate tracks, we may benefit more from conceptually converging these into one development agenda. This means that the green agenda and the conventional development plans must be addressed jointly. Using this approach, we define priorities area of work to integrate climate change considerations into the design of monetary, financial, and macroprudential policies, including the following. Always keeping in mind that we are a central bank, we are working on, at the macro level, the central bank is preparing indicators that combine the main climate hazards, notably hydrometeorological ones, and the degree of vulnerability to climate-related events at the sectoral and geographical levels. We're also working on the assessment of systemic risk resulting from the exposure of private and public banks' credit portfolios to vulnerable economic activities and regions. We have developed a methodology for greening a small percentage of our international reserves, We are identifying and addressing data gaps, which is key, I think, in general, for public and private entities to make better decisions. We need more elaborate and complex indicators to carry out our job under conditions of uncertainty and global risks. Unfortunately, until now, and this is why this is bracketed, we have not been able to measure the positive effects in terms of avoided emissions from establishing a nationwide electronic payment system, SIMPE, which is now a very popular national initiative. And also we have not measured the impact of implementing digital signature procedures. And finally, we have worked for many years, as I mentioned, in the sustainability of bank operations, but we're still in the process of making it part of an integral approach. Finally, I would like to end this presentation with some concluding remarks. We are a central bank. Let us not forget our mandate. Focus on other issues such as climate change and biodiversity conservation will be relevant to the extent in which they affect our operations and overriding objectives. Second, we are just beginning to understand the profound transformations that are happening and how they will affect our operations. For example, incorporating physical variables in our macroeconomic analysis. We're just learning how to do that. We must improve our understanding of the way in which geography and geolocation matter to our work. We must better define temporal horizons of change, which means going beyond the customary 24-month forecast to constructing and exploring medium and long-term scenarios. And then, becoming more aware that powerful analytical tools are needed to improve central bank decision-making and contribute to the decision processes of other supervisory bodies, public and private entities, and the general public. Finally, and to all of us, be curious and critical because we are navigating uncharted waters. Thank you all for your attention, to OECD and peer panelists for sharing their experience, and to the Central Bank of Costa Rica for defying the difficulties and producing outstanding work. Thank you very much.
Gracias, Silvia. Thank you very much. We already passed the time, but still, I think it would be worth it if I could ask each panelist one question. I think really there's been a fascinating discussion. And so I would like to add something very quickly. So let's start with Eduardo. Just one question for you, Eduardo. What are countries in the region doing to adapt to the challenge posed by climate change and disaster? You are starting to talk about that, but perhaps if you could tell us in 1 or 2 minutes. Sorry for the rush, but 2 minutes.
Yes, thank you very much, Alvaro. I will very quickly. I think we need to focus on workable solutions for the region, both on the dimension of mitigation and the dimension of adaptation. One thing I want to stress is that good climate policies and good development policies are inextricably linked. It's not true that there's a trade-off here. There are opportunities for win-win policies, meaning policies with a climate and development benefits. So, for example, think about sustainable infrastructure, which is good for growth, but will also help build resilience to climate impact. Also think about investing in social services and social protection, which is something that we need for equity in the region, but also helps to promote resilience. The second thing I wanna say is that the transition to resilient net zero economies can be net positive for countries in the region. I was briefly giving the example of Costa Rica, but we can sort of extend this to other countries as well. Carola mentioned the approach in Chile, for example. Now, with advancing this agenda, there will inevitably be winners and losers. So compensating losers is key from an equity perspective, of course, but also from a pragmatic standpoint, because climate action will require broad buy-in. If we do not understand that, if we don't address that, then we are not going to be as successful on that issue. Another issue that was mentioned here, and I want to stress, is the issue of financing. Financing this transition will require mobilizing resources and redirecting existing financial flows. I think multilateral development banks like the IDB can play a particularly useful role here in helping mobilizing and directing resources. And finally, the last thing I'm going to say is that governments need to prioritize and coordinate climate efforts across sectors and levels of governments, and also engage with citizens on this agenda to garner support for climate action. So I leave it at that. Thank you, Alvaro.
Thank you very much, Eduardo. Carola, so we know that obviously, and we debate extensively that climate change presents a lot of challenges. In fact, there are a lot of costs involved. But also, we know that the green transition can boost growth and generate new jobs and nascent industries. So given the Chilean experience, what are the actions that governments can do to benefit from the transition? In 1 or 2 minutes, thank you.
Yes. In our regard, well, we had productivity decreasing for 10 years now. So basically, what we call the measure of our unknown, right, of our ignorance, the A on the solo production function, what we're trying to do is to materialize that into activities that have what we call like positive externalities, but also multiplicative effects on the economy. So we are introducing a lot of measures in order to boost investment into this type of industries. So for instance, we're also trying to promote and tax credit for those activities that have this multiplicative effect or impact on other activities. And of course, many of those activities that can benefit from this tax credit are carbon emission reducing industries like green hydrogen, for instance. So this type of measures are orienting our strategy so that they can contribute to our potential growth in a material way. We've had some preliminary estimates, and not only modifying the energy matrix can have positive effects, but the overall development of this in terms of also contributing to labor abilities. We need more sophisticated labor for this type of industry. So that's another way of contributing and developing improvements in the region. So we have a lot of community engagement to do that and to boost a regional production and development.
Thank you very much, Carola. And finally, Sylvia, obviously central banks right now are, this is a hot topic, but obviously a big issue is how do central banks manage to communicate on these new areas of work? And can you give us in 1 or 2 minutes your perspective on how can we improve communication central banks for these areas? Thank you.
Yeah, well, help wanted is what I would like to say. It is very difficult, and it has been very difficult for central banks to communicate even their own monetary policy. So to communicate why are we engaging, and more or less the presentation that I just gave you is something that we have had difficulties in communicating within the bank and also outside of the bank. So I think it is a lot of room for improvement. We need other stakeholders at the table to know that we are working on this, and also to learn from them what they are doing. We do communicate with, as I said, with peers and partners internationally, but I have a feeling that we could do much better within. So these are any of you and all who would like to share their experiences, they are welcome. Thank you.
Thank you very much. Well, I would like to thank first Elias, Carola, Eduardo, and Silvia for a fantastic panel. Obviously, these are topics that we'll continue to discuss in the next few years. We'll have to continue to work in terms of mitigation. That's why the OECD launched recently the Inclusive Forum of Carbon Mitigation Approaches, in which we'll cooperate with your countries exactly on these issues, and happy to continue to cooperate on the IDB too. And exactly the idea is, how can we try to understand what are the policies around for climate mitigation, what are the most effective ones. Secondly, we have to work, like we discussed also in the panel quite extensively, adaptation. Sometimes, especially in advanced economies, sometimes we focus more on mitigation than adaptation, but adaptation is going to be the name of the game for all countries, but in particular for many countries of the world that are not as developed, and particularly also for countries that are, as our panelists said, are in areas of the world that are more prone to have extreme weather events and to have an impact that is going to be quite significant. I think what we should do is continuing this dialogue and to continue to understand how can we think better out of the box, how can we make the green transition not look at it as a cost, but really an opportunity, as an engine of growth potentially going forward to make a transition in the economy. And with that, I would like to say that it has been my pleasure to chair this panel. And I think we've had really good presentations. So congratulations to all panelists, and look forward for the next Latin American dialogue that we'll have in a few weeks' time. Thank you very much. Have a good day.
Thank you, Alvaro.
Thank you, Alvaro, and thank you, everyone.
You too. Thank you,
Bye-bye,
Carola,
pleasure.
Silvia, Ambassador.
Bye-bye.
Bye-bye.
Thank
Paula,
you.
gracias.
Thank you.
Ciao, Paula. Gracias.